Before we get rolling, I wanted to introduce myself and the other members of the panel here today. What we want to talk about is overcoming go-to-market challenges in ag tech. We got a number of venture capitalists here, a number of startups, and I think some of the perspectives from these companies will really help folks out. So myself, I'm Mark Young, Chief Technology Officer at the Climate Corporation. Most folks know us in the space as the unicorn, the near $1 billion acquisition. There's pluses and minuses to that, I'll tell you. I've been at Climate for about 2 years, two and a half years. I've spent my entire technical career here in Silicon Valley. I'm going into my 21st year now in Silicon Valley. But like Steve Forbes said this morning, I actually grew up on a farm in New Jersey. So I will second the fact that there are farms in New Jersey. And my mom and dad still live there. So it's a treat for me to have my ag background, spend that time in Silicon Valley in tech, and now bring those two worlds together. The previous panel talked about the hybrid vigor. We're going to beat that pun to death by the end of the day, I think. But that hybrid vigor of bringing different worlds together to solve some of these problems, and I wholly agree with that. So with that, let's go down the line. You guys introduce yourselves. Tell us a little about yourself and your company.
This is Jorge Jarrod. I'm very, very happy to be here. I've been in Salinas a lot. We have a product that works in lettuce and uses a very neat technology that is very, very revolutionary in what it does. It looks at every plant and sprays every plant based on what it saw. And this is very unique, very different from what is done in agriculture. And we've not only done that, but we've expanded that. We now have a product in cotton, and in cotton what we do is we spray weeds without spraying the crop, without spraying the cotton. And by doing that we can reduce the amount of chemicals sprayed by about a factor of 10. We can use chemicals that are not traditionally used as herbicides. We can move from the traditional GMO and chemical associated with it. We can open the number of chemicals sprayed. We can reduce the amount of chemicals used. We can save money for the farmer. We can save on seed for the farmer. We can save in other operations. So we're having a lot of fun bringing that type of technology to agriculture.
Great.
Hey everyone, my name is Ashwin, and I usually go by Ash for short. I'm the founder and the CEO of Series Imaging. And what we do, we provide farmers aerial imagery on a subscription basis. And we've developed imaging technology that can measure water and nitrogen content of plants at a plant level. So we provide that over the course of a season to a grower to help identify overwatering or underwatering, variability in fertilization and fertility issues, manage other risks, and help optimize yields. And I started the company about 4 years ago. I'd used to work in agriculture in Brazil and Colombia in large-scale sugarcane, where I saw the potential that data could have a really big impact on efficiency, sustainability, and yield optimization. And later, I was a grad student doing a MBA and also in the Earth Sciences program at Stanford, where I was exposed to this technology that was being used academically to monitor rainforests and characterize ecosystems. So it seemed like it could be a real powerful thing if it turned into a commercial product for farmers. And that was the inspiration behind starting the company. Today, the team is more than 30 people. We're in Australia, California, the Midwest, and a few other regions. And look forward to telling you more.
Thanks. Well, good morning, everybody. My name is Kevin Monk. I'm from a farm originally in Central Illinois. Still farm with my family there, just corn and soybeans. So it's funny growing up in Central Illinois, you get kind of closed-minded and think that all farming is corn and soybeans. So it's fun to see a lot more than that. So I'm with Spec Technologies, and we develop agronomic sensor and integrated pest models. So the idea is, if the plant can talk, and we know the plants are talking to us, what does it say? What does it need? And we develop sensors and models to help us understand what it's saying, and then how do we manage that? So that's what we do at Spectrum.
Great. Okay, so the four of us got together when we decided to hold this panel, and we started to talk about some of the experiences that our company has gone through, and we found obviously there's a lot of similarities in experiences that we've gone through. Jorge, when we talked, I really like the way you characterize this idea of three distinct phases that typical ag startups or even established companies that are moving, transferring their business, the three phases that they've gone through. Can you share that with the folks here today?
Yeah, that's right. We were talking about how startups get their products to market, right? Agriculture is this industry that has been going for a long time, and how does a startup in this environment start? What I believe is that majority of startups, for sure what we did, but a majority of startups start by having their CEO be the first salesperson, right? There's no other way that I've heard that is effective. What you need to do as a founder of a company, as a CEO of a small team, is talk with customers. There's nothing more valuable than talking with customers, understanding their problem, what it is that they're trying to solve. How does your solution fit into what they're doing? What are alternatives they have? What value are you providing? How can you improve your solution? And you need that information. You need, as a founder, as a CEO, you need that information. So the way that most startups start on this process is by going and talking with the customer, and it's the CEO. There's no distribution, there's no sales team. It's the founder that goes and does that. And that usually continues until you get to a certain scale. It depends a little bit in each company, but probably when you get to 10, 20 people and you start having more of a product, you can start thinking about how do you scale that. So there's a second stage where you transition from this model and you start going through a little bit of a hybrid strategy to sell, where you might have some internal salespeople, where you're starting to have a better feeling for what the customers are going to be asking. You start having a little bit more of a repetitive formula. And the third stage is where a lot of startups want to get, where it's just, hey, we now have it, we have a product, we know we have a very strong value proposition, and the way the challenge that these companies have is, how do you get that to all of ag? Because ag is a big business, right? It's done all over the world. It's not just California, it's not just the US, it's all over the world. So how do you get there? And the only way to do that is to leverage channels. And there's three different channels that can be leveraged, or three different things that companies that get to that scale can do. There's a very large channel on the ag retail side. Companies like Wilbur Ellis, like CHS, Helena, CPS, that have a dealer, a location, somebody that has a relationship with a farmer in every single town in the US and the world, right? So that's a really, really good channel, the ag retail channel that sells seed and chemical. There's another channel around ag machinery companies, right? Ag machinery, there's a tractor dealer also in every major town, and farmers buy and trust that network. So those are the two most obvious. So depending on what product or service you have, you would go to one of them. But another one that I want to make sure that especially startups don't lose sight is the internet. It's starting to be a more credible channel. It used to be that not very many farmers had access to internet, but that is changing very fast. Everybody now has a cell phone, a smartphone, and it really has become a third channel. And I think especially for companies that want to get scale fast, it's an interesting channel. There's been really some really good successes lately. Farmers Business Network is doing that and using the internet as a good way of getting out there. So the 3 stages are do it yourself when you're small, start having a little bit of scale by your internal team, but then consider these other channels.
Right. Ash, given those sort of 3 scales, your startup and your internal scale, external scale, talk to us a little bit about how important that first step is and how you go out and acquire that first customer and really get to know them and understand the problem that you're going after.
Yeah, definitely. So in the beginning, when we had just started, it's pretty easy to get in front of a customer here or there, a farmer. Like, we're lucky to be in California where there's so many in our backyards, the vegetable industry, tree nuts and vines. So in the beginning, we started working with a handful of tree nut and vine growers as well as the universities. The universities are a phenomenal resource and access to the agricultural market. So we worked with cooperative extension scientists to test our imagery in the different trials that they were doing. And through that, once we showed real results and went through their vetting process, a lot of farmers came to us proactively because they wanted to see how that could be applied into their production fields from the test fields. With those core set of customers, we really understood exactly how we were affecting their water and nitrogen applications and saw where we were catching problems for them. And then we took that model, we had the university validation that the science worked and it wasn't snake oil. We had the return on investment, where we have real examples of farmers that were able to provide value well in excess of our costs. And then we took those 2 things and then started working with different partners, retailers, and then our own sales force and myself, driving out in the Central Valley with my Corolla, and just started getting customers here or there, and then by doing right by customers, they would introduce us to other farmers in their network, and so we grew a bit virally.
Great. So Kevin, I'll come to you next. Spectrum's a little bit of a different stage of its life cycle than these 2 companies, and certainly Climate as well. Talk to us a little bit about what that means to your company transitioning into this new space. We talked a little bit about the combination of software, hardware. Take us through a little bit of that, and given those 3 stages, sort of how would you characterize where you are today in your ag initiative?
Sure. Well, I think one of the biggest challenges as the market matures and as it goes through a growth phase, more and more people enter the market. And I think the biggest challenge is how do you differentiate? There was a period about 2 years ago, if you guys remember, every week you got a new magazine article about a data company who was going to change for ag, and they were going to have informed decisions, they're going to make your life easier, you're going to be smarter, you're going to use less inputs. And it's like they all had the same marketing agency because every company was going to do the same thing in those same 3, 4, 5 bullet points. So I almost got to the point where I was getting nauseous reading a new company who was going to change my life. And so it got to be a point where there's so much clutter. And you'll see that in whether it's the imaging business or any other business, is the value proposition is very similar. So then how do you stand out and differentiate yourself? If people are going to give you images and low cost and show your nitrogen usage and water usage, how do you show that you can do it better or to get more value from using it from you? So at Spectrum, like I said, we've been around for about 30 years. And so as more and more people enter the space, the sensors, I don't want to speak a commodity, but it's really not about the sensor. The farmer doesn't want a sensor. They don't want to know what the water level is in their field. They want to make a decision. So how we've decided to differentiate is really combine the hardware and the software to say, okay, here's the solution you have. Here's the need you have, and here's how we provide the solution. So it's not about the hardware, it's not about the sensor or the soil moisture, it's what do you do with that information. So for us, we've combined the sensors with the data platform, and then show the farmer, here's the value, here's the decision you have to make. You can do this or you do this, but here's the information you have to make that decision, and how can we help you make that decision? Along with that it's not just leaving them there. I think what differentiates us as well is the support we offer. So having a team that if there's any problem issues, problem resolution needs, we offer that support. So it's not just about having a product, but you differentiate yourself on the services you offer with that product, and then the support you offer with that whole service. So it's really a combination. How do you really give the farmer what they want, which is a solution, a decision, not just the information.
Yeah, I like that. Certainly in climate space, where we talk about data science and using data science to make better decisions, we talk about being data rich and information poor, right? Almost all of my customers have hard drives full of 10 years of data that they've been pulling off machines, and it's still sitting on those hard drives. They really haven't done anything with it. So I like that, and I like that theme of really delivering ROI for the farmer's dollar, right? These are all new services, new capabilities, and we need to prove ourselves in terms of how this brings value to the space. Ash, I want to come back to you. When we talk about getting to ROI and getting our customers to see and realize the value of our services, we have this problem in ag where it's seasonal, right? And so a decision that you could make very early in the year, you may not see the value or the result of that decision until much later. Talk us through a little bit about what Ceres has run into in terms of getting to that perceived value as quickly as possible.
Yeah, totally. So to your point, the limit on how quickly you can acquire a customer is how soon you can prove value for that customer and in a field of their own. So all farmers typically buy in the same A/B testing approach, where they will do a trial, and then if that trial works and they believe that they're making more money than the product is costing in that trial, then they'll expand it in some capacity. With imaging, we are fortunate in that we're not like a seed where you can only plant it in a very specific window, or a fertilizer, for instance, where you need to wait all the way until harvest to understand the impact of what it has. Once we take an image, we can point out, this looks like a missed fertilizer application in this area. Here is a water distribution problem or anything else like that. So as soon as we have processed those images, we have a very quick time to value. As long as there's some crops in the field, we can go through that A/B testing cycle. Now, in the months where there's nothing growing, that's certainly a challenge, and where the seasonality in our experience really becomes a major issue. And one thing that we're doing is diversifying by also operating in the southern hemisphere. Australia is a great off-season market for us, and we're also evaluating Brazil and other things like that. The other thing was just be like looking at different crops, which have different growing seasons and growing cycles. It also insulates us from any price swings that an individual market would face, and it allows us to still be focused on those crops while looking at a little bit broader market.
So that's interesting. So diversifying your geographies and crops, but which phase of evolution would you put that bucket in? Is that sort of your middle internal scale phase, or would that be later on in your external scale?
Sure, it's really all of the above, and our company is in all three of those phases in different markets.
That really makes it easy for everyone. Sorry, folks, it's not that easy.
Well, I think that everybody's familiar with that book, 40 Harvest, which the theme is that our customers, they really have 40 chances to make a crop, and if they miss a chance, that's one that they missed, and you got to wait a whole year before you get that next chance to get that crop. You put the seed in the ground, you have to wait till harvest to see what the results and get that chance. And if you miss that chance with seasonality, with product delays, it's a whole year. And yeah, we can go to other places like the Southern Hemisphere and that, but you haven't proven the business in that area. And so you've lost that market opportunity for that 1 year. So really being able to get it right, and scaling it, make sure you know that you got a good product in a beachhead area that you can grow from there. Because again, our customers only have 40 chances to make their livelihood.
So, so go ahead, Jorge. In that sort of vein and that time frame around recognizing return on investment, what has been Blue River's experience?
Yeah, perfect. So what we decided to do is to start here in Salinas. We decided very consciously that our first crop was going to be lettuce. We are bringing this new technology. We knew that row crops was always going to be our big market, but we decided to start here in Salinas. The reason we did that is because Salinas is probably one of the few valleys where they break this 40 harvest paradigm, right? I'm sure everybody knows here, they're planting Salinas, in Salinas they're planting lettuce today, they're going to be planting it tomorrow, they were planting it a month ago, they were planting it 3 months ago, and they have this continuous way of planting. Lettuce doesn't keep, so you have to harvest every day, so that means that you have planted every day. So if you're developing a product like ours that is in thinning or in weeding, it's the perfect market. I can come every day and show it to the farmers, get feedback, prove that a machine works, and do that today, do that in a month's time, do that in whenever I want in the year, and have 365 chances to try that. So that's a good way of breaking that and accelerating, proving to yourself, proving to your customers that you have value. And we decided to go that. That's the reason why we pick lettuce. And on top of that, I don't know, Salinas is beautiful, and what a better place to be doing farming in.
Yeah, the winters are a lot better here than in Iowa, I'll say. So, talk to us a little bit about phase 3. You've obviously been very successful in the lettuce space. What are your plans now for either expansion of crops, geographies? How do you achieve greater scale for the company?
Yeah, that's very interesting. We've been exactly in that state, right? We've graduated from step 1 or phase 1. We're to the point that we're about to start graduating on stage 2, and we're starting to have these conversations. We're starting to have a conversation with distribution, with retailers, with ag machinery companies, trying to understand how it is that we can use those channels, right? In the case of our product, our product is a machine that is an implement, a smart implement that it gets pulled behind a tractor. So we have different ways of going to market. One of them is to go through a traditional way where we sell the machine. We give the machine to, let's say, a Case dealer, a John Deere dealer, or a Trimble dealer, and they sell it to the customer. That's a good way of achieving scale. There's thousands of those dealers, and they can scale that. Another way we've been discussing is using partners that do this operation called custom application, right? Where they would spray chemicals or harvest or help farmers that don't have the scale, or for whatever reason they don't want to own a combine or own a harvester or own a sprayer, and they could buy equipment for us. These are the retail channel again that has this custom application route, and they would buy equipment for us and then provide the service and charge the farmer for the acres that they service with that machine. On top of that, there's other innovative ways of trying to go, and as I was saying, internet is an interesting one. At this point, we decided to use it more as a way of creating awareness and creating interest from the customers as opposed to a sales channel. But all of that is in our mind, and I think at this point we're leaning more towards the ag machinery and the retail channel in different capacities.
Yeah, I think that makes a lot of sense. Ash, Kevin, I want to come to you guys because in that phase 3, the end of last year, we announced FieldView Platform as sort of a new twist on that channel to go to market, and it's designed wholly around accelerating fellow startups and their technology and bringing them to market to an existing customer base around some of these sort of more traditional channels. Ash, we announced just a couple weeks ago the pilot that we're doing with you folks in the Midwest. So can you guys talk about sort of that new third option on how to sort of get the market in that third phase?
Right, and to be specific, you're talking about the new digital channels.
That's right.
FieldView being one of them. Right, so with the evolution of FieldView and other digital ag platforms coming more into the mainstream, it does provide a really great opportunity to partner and reach a broader audience at scale and a lot more quickly than it would be with boots on the ground or even through the traditional retail channels. The retailers have certain pros and cons. With a retail agronomist making a lot of money from selling chemicals or fertilizers, they're very hesitant to put a digital technology, which they might not totally understand, in front of a farmer, because why would they risk all of their livelihood essentially for something that's less familiar or new to them? So by working with Climate, we were able to access the farmers that were already on the front of the adoption curve, the ones that are the more progressive and digitally minded. So for us, it's been a really good way to almost segment the customer base that we've been looking at and start working with some more technology-friendly customers in that market, while creating a customized product for that Midwest market. So in the Midwest, I'd characterize our product more in the phase one, where we're still trying to get that product market fit. In specialty crops in California, we're really trying to scale and accelerate adoption there. So the retail comment is more towards that. But yeah, Climate has been a really great partner to help us accelerate getting into those other markets like the Midwest.
Great, and Kevin, a little bit about...
I was going to say, as we're talking about the challenges of ag tech, I think after differentiation, distribution is the number one challenge. I've been fortunate in my career. I worked both for John Deere many years and also for C&H. And their products are, I would say in the end, very similar. They do a job. But if you compare the two, you look at John Deere has really a superior distribution channel. And that's, I think, why they have such great market. And it's the same thing for us as a startup or a sensor, is how do you get good representation at a distributor? You have to go to established business, I assume. But how do you get a significant share of that person's business so they give you time and they promote your products and make it worth their while to promote you? So I think one of the biggest challenges is, you have to give up some margin so you can work with the distributor and make it a good business for them. So I think the challenge really is, how do you make your product a good business for somebody else to sell? And I think that's one of the bigger challenges after differentiation of what we need to solve.
Yep, that's a fantastic point, and I know it's something that we deal with at Climate constantly. I want to leave some time for Q&A. I think we got an interesting panel. I think we definitely got somebody hot with a hot question over here. So let's have at it.
I got you. I just got the mic.
Okay. So he seemed really ambitious. All right, questions.
I'm Steve Fenimore with University of California. I've been working with, it's weird echo, with robotic cultivators for about 10 years. And it's pretty often that I hear from growers, why should I spend $150,000 for this machine when 2 years from now it'll cost $50,000? How do you guys respond to that?
Yeah. Good to see you again, Steve. We've been working for a long time. I guess the best answer I have is you've seen this as long as anybody. When they were launched, this automatic cultivators about 2 years ago, they cost about $150,000. Today they cost $150,000. So it might be that waiting 2 years is not the strategy to go. I think that. I think that's might be taking a risk on on seeing the consumer experience, right? It's very different when in a phone or in a computer where you start making millions of them, then yeah, there's economies of scale that take over. But in Salinas, in a machine that is specialized in lettuce, the market size is only so much, right? Tractors, pieces of iron are not following the fast curve that let's say a PC or a phone would follow. That's one comment. The other way we decided to tackle that was more on the speed of innovation. We decided to have our machines offered as a service, so that you get always the latest, because we own the machines, we upgrade them. We are actually in lettuce thinning. We are in our 4th generation machine. A lot of farmers here have seen our machines from the early days when we did 1 row at a time. Now we have a machine that does 18 rows at a time. And because we operate as a service, we offer the latest machine to the farmer. Our machines get better. And I think that more important than the machines getting cheaper, what the farmers should be thinking about is, are the machines getting better?
Great.
Yeah.
I think we can squeeze in one more. Do we have another question over here? Anywhere? All right, you guys must have nailed it. All right, thanks everyone. Thanks to my panel for coming out.